Let's get to Viktor Katona, who is lead crude analyst at Kpler. Hi, Victor. Nice to see you in the studio, sir.
Yeah, absolutely. Lovely to be here.
Right. So, robust data across the board. Why is Brent only trading in the mid-80s?
I think we're stuck in a tug of war between really good data from Asia. Every single time we get them, we get a little bit upbeat. We think that this is going to be the story when we finally see it. And then something from the US comes in and we're like, no, not again. So effectively, when we look back on 2023 and the 2 months that we have had, it's a continuous struggle between fears in the Atlantic basin and optimism coming or emerging from Asia. It's not necessarily there in terms of physical trade, but the feeling that Asia will drive 2023 in the oil markets is absolutely there. And until there's a winner in this perennial contest, what matters more? The Atlantic basin, the US, Europe, and how it feels about oil demand, or Asia, which is pretty much on a growth trajectory.
I know that we discussed this last time down the line, but I'm going to go there one more time because... Only one more time.
Yeah.
There are so many great and good, I think I probably used those words last time, who are telling me that we are $110 a barrel, we are $120 a barrel, and yet I still keep seeing mid-80s. Why are they right in their heads but wrong in the physical market at the moment?
I mean, they can always talk up their books. So you should never discount the possibility that these people have...
And they may have relationships with countries that have NOCs.
For instance, I'm not insinuating anything. I'm just saying that...
That's why I'm clearly not mentioning any names.
I mean, I try to be objective. I see what I see, and I see that there's no clear takeaway into who's winning right now.
Yeah.
And believe or trust those guys who are more conservative right now, because there seems to be this perennial struggle. And I think we need to wait until at least 2024 or 25 when we can actually say, look, this is a growing market where we have still not reached oil demand peak, and you know, its price is higher for longer. I mean, I absolutely agree that the prices are higher for longer because we're not drilling enough. I mean, exploration drilling is just subpar across all the continents. But now is the situation when it's time to be cautious, when it's time not to make very bold calls on what's going to happen. Right?
Yeah, that's part of the problem with the demand side of the story, isn't it? That we have seen all sorts of substitution take place, and people engage in extraordinary ways to reduce consumption behavior because of the war in Ukraine.
Yeah.
So can we just briefly talk about that dimension and whether the learned behavior that economies are engaging in now to mitigate the impact of that is going to be permanent, or whether we're going to go back to the world before the invasion?
I mean, we're certainly not going to go back to the world before the invasion. I think oil right now has a reputation of being a market which is difficult to get into. Which also means that we will increasingly be dependent on the ones who still think oil is trendy or is worth investing into, which also means we're going to be increasingly dependent on OPEC for spare capacity and production. And unless the Western world, which right now wants to cut its oil consumption, wants to get rid of oil in effectively every sphere of activity, unless we start drilling too, we are losing the competitive edge to effectively the national oil companies. Because oil, in my perception, will only peak around 2025-26. After that, we have a 5-6 year plateau. At least in the next 10 years, there will be no decline.
Hang on, is that oil price, oil consumption peaks? Okay.
Yeah.
Demand.
Yeah, oil demand.
Interesting. The data today we get is inventory data, which I think you've kind of referenced, but could we just dive into it a little deeper here, because this is the 10th consecutive month of build as far as the US supply is concerned. What does that tell us about the ability of the US effectively to make up some of the 700,000 reduction we've seen out of OPEC since September?
Well, the US is in a difficult spot because in 2021-22, when shale companies went into market, realized that this is higher for longer, everyone started producing. But because refinery margins were so good, no one was actually doing any maintenance. So in February, you suddenly have a month when 1.5 million barrels per day of refineries are just offline because they need to have the maintenance. Otherwise, it's trouble. Then you have the bomb cyclone at the end of December, which also pretty much impacts the refineries. And now you have a situation where supply is growing and the domestic demand is declining. The end result, effectively, will be U.S. oil exports will be the highest ever in March. That's already certain, because the domestic market just cannot handle it. It needs to go out. And also, if you've seen WTI compared to Brent, there's a solid $7 difference between the two. And it's stemming from this. There's just way too much crude in the US. It needs to get out of the market, and the only way to do it is to discount it.
Victor, I've just come back from Poland, and no one wants to see this war go on any longer, but I can't see how it ends anytime soon. That said, what happens over the medium term to Russian supply and its relevance to the globe? Because as Jeff quite rightly said, we found conservation and alternative supplies in all kinds of ways we never thought possible as well. There's a whole load of buyers there who are sick of the Russians and won't ever go back to it unless there's a regime change. We don't think there's going to be a regime change meaningful. If it's not Putin, it'll be another ultranationalist. So what happens to Russia over the medium term?
I think Russia effectively is an Asian nation by now.
Yeah.
I think India and China will, for a long period, be the main buyers of Russia. It's going to become the new norm. India already is the largest buyer of seaborne crude. China is the largest buyer of Russian crude by default. I mean, just think about it. China buys a quarter of Russian production. That's massive. And I mean, Russia has a domestic market too.
Yeah.
So I think that's going to be the end result. Russia out of Europe, Russia perennially into Asia. There's going to be new links between those countries, and that's pretty much it. I mean, we in Europe will find the supplements to it.
Victor, it's been a real pleasure. Thank you so much for coming in. Good to have you around the desk. Viktor Katona, lead crude analyst at Kpler. Just let's mention in